The struggle for a lot of people is if you've accrued debt outside your mortgage, that means you're barely making ends meet and you're having to rely on outside credit. So again, if you bought your house 5 years ago, or if you've owned your house beyond the 5 years, and the amount of equity that you've built in the last 5 years is tremendous. So therefore, you've got an opportunity to knock off. And I know that people say they don't want to increase the amount of time on their mortgage, but you have to still survive. And listen, carrying outside debt doesn't make a lot of sense.
Well, what's that unsecured debt at?
Could be 10, 15, 20, 25%.
Right.
So
bringing that down to 4% is going to save you.
Amazing. And in many cases, you can keep the payments virtually the same and knock off all that debt so that, you know, if that's what you're doing, all of a sudden now you're eliminating having to pay that unsecured debt on a monthly basis. The goal is to be able to structure your mortgage in a way so that you don't have to rely on outside debt. There's enough money coming in that it'll pay your mortgage payment, and then whatever else you're doing throughout the month, you'll be able to afford with your paycheck as opposed to having to fall back into the trap of having to use lines of credits or credit cards. That's the goal.